All right, let's do this. I know you want to retire on Bitcoin. I know you're sitting around all day thinking, how much Bitcoin do I need to retire? How many friggin' sats do I need to stack till I can quit this dead end job that I hate, go fill my boss's car with 1,000 gallons of popcorn, wrap it in saran wrap, and shove it off a cliff? Well, by the end of this video, you're going to know the answer and you're going to know how to break down the math for yourself. I did do another video previously about why trying to retire on Bitcoin is actually the wrong mindset. Go watch that one here. But for this video, I'm going to give the people what they actually want, which is how much friggin' Bitcoin do I need to retire? I'll start with the framework you need to understand in order to break down the math on your Bitcoin retirement goal. So the framework you need to start with is to understand something called the Bitcoin block reward. There's something I'm calling the halving paradox that will help you see how the value of the Bitcoin block reward equates directly to your Bitcoin retirement stacking goal. Very long technical story short, roughly every 10 minutes, the Bitcoin network produces a new block. That block confirms recent transactions and adds them permanently to the Bitcoin ledger. To decide who gets to add that new block to the blockchain, the miners compete using very specialized computers. And the winner gets paid a reward for finding that block. That payment is called the block reward. The block reward is effectively how Bitcoin pays the miners for securing the network. There's a lot more to this, obviously, so I can go more in depth on it in another video. If you're interested, leave a comment on that. Also, a very interesting way to think about that block subsidy is that it represents 10 minutes of the total energy and compute power on the largest and most secure computer network on the planet. Let's just say that it's an unimaginably large amount of compute power, colloquially known as a metric ton. As in, if you combined every laptop, phone, and desktop computer on Earth, wouldn't even come close to matching the hash power of the Bitcoin network. If you own one block reward's worth of Bitcoin, you own the monetary equivalent of 10 minutes of the largest and most secure computing network that's ever existed. And that 10 minutes worth of compute power is the key to unlocking your retirement goal. I'm about to explain what that means. Real quick, you're watching the Sat Stacker Show, a Bitcoin show for people who think deeper about money. I'm your host. My name is John, aka the Sat Stacker. This channel is for people who want to learn to stack smarter and grow their conviction in Bitcoin. So if that sounds like you, hit the subscribe button and let's get into the rest of this thing so you can retire on your Bitcoin. This is my opinion of what your stacking goal should be depending on when you want to retire. You can use the block subsidy schedule to help you figure out when you can retire on Bitcoin. I played with a few different retirement calculators to get these numbers. I'll put some of this on the screen and you can use these retirement calculators too. I'll put links to them in the description. But using the Saylor growth model, he uses a base case projection for the next 20 years of 29% compound annual growth rate for Bitcoin. If you stack the current block subsidy amount of 3.125 Bitcoin, you can retire in about 8 years. So around the year 2034. If you stack the next block subsidy amount, which is 1.5625 Bitcoin, you can retire in about 10 to 11 years from now, which is around the year 2036 or 2037. If you stack the following subsidy amount, which is 0.78125 Bitcoin, you can retire about 13 years from now, which is around 2039. If you stack the next Bitcoin subsidy amount, which is just 0.390625 Bitcoin, you can retire about 15 to 16 years from now. So on or around the year 2042. Now, Saylor also has a bullish case and a bear case growth scenario for Bitcoin. Suffice it to say, if the bull case comes true, you can tell your boss to go f himself a lot sooner. Now I'm going to spend the rest of this video explaining to you how I got to those numbers and why they make perfect sense. So that block subsidy amount that we talked about that gets issued to the miners when they find a new block, that's hard coded into Bitcoin's source code. It can't be changed, and it started at the very beginning at 50 Bitcoin per block back in 2009. And then roughly every 4 years, that amount gets cut in half. So that's what we call the halving. So in 2012, it went down to 25 Bitcoin. And then 2016, it went down to 12.5 Bitcoin, etc. And that's part of the reason that we know there will only ever be 21 million Bitcoin total. And after the last halving, all 21 million Bitcoin will have been mined and no more new Bitcoin will be issued into circulation after that. So unlike fiat money, Bitcoin is hard coded to remain scarce. Instead of printing more whenever the politicians or the central bankers want to, or even when the population votes for it, Bitcoin prints less over time, no matter what. And no matter how much the demand rises, no one can change the rules, no matter how much power they have, which obviously is the exact opposite of fiat money. This phenomenon does lead to an interesting question, because understanding this idea of true scarcity is the key to understanding how much your Bitcoin is really going to be worth in the future. It's a very common belief that as the economy grows, more and more money must be issued into circulation in order for there to be enough to go around, or some BS like that. So that line of thinking would lead you to believe that this whole Bitcoin halving thing with the finite total supply is a stupid, terrible idea, which is what most Keynesians think. If the Bitcoin is getting more and more scarce relative to the growing economy, somehow that becomes a bad thing. So what gives? How do we circle the square on this? How do we think about these two opposing ideas? So I want you to do me a favor for just a minute. You take what they taught you in Econ 101 about quantitative easing and expansionary monetary policy, and you just hold it over here to the side, okay? I'm not saying you have to forget it forever, but if you give me just a second to pose an alternate reality, because if we look at Bitcoin, the Bitcoin network, as an alternative monetary system to the fiat system, one where there's a total finite supply of the monetary units and a fixed issuance schedule of how those units get entered into circulation, and there's no central bank to expand and contract the money supply like some drunk German busker playing the accordion outside the pub. So in this new alternative system, you see a strange phenomenon emerge, which is that, you know how we said every 4 years that Bitcoin block subsidy, that amount of new Bitcoin that the network issues to a miner as a reward for producing the next block, that amount gets cut in half. But somehow, magically, even though it's cut in half in Bitcoin terms, that block subsidy is somehow magically still always worth more in dollar terms. It's worth more in real purchasing power terms. And whenever you're talking about money, you need to be thinking in terms of real purchasing power. Nominal units are effectively irrelevant in the abstract, meaning $1 trillion note in Zimbabwe means nothing if you can't get any real goods and services for it. So every 4 years, despite the nominal number of Bitcoin in the subsidy going down, the real amount of goods and services and assets that Bitcoin can buy is going up. So most people who took Econ 101, like I did, your brain might be going like, I don't like it. Because over here, you have an old idea that we've been taught that you have to have more and more units of currency being issued into the system over time, which obviously is something called inflation. And it means that by definition, each individual unit of money loses real purchasing power as it becomes a smaller and smaller fraction of the overall total supply of money. But then over here, you have a new idea that says there can be a fixed number of units, but the real purchasing power value of each unit can still go up over time. And I know, it's uncomfortable. New idea bad, old idea comfortable and safe. So you can take your Keynesian security blanket and put it back on now if you need it. But you might not want to, because remember, we're talking about retiring on Bitcoin. And this mental framework that I just gave you is the key. The idea that every 4 years, the Bitcoin block reward falls in Bitcoin terms, but grows in dollar terms. It is my belief that you can use this idea and you can use the block subsidy and the halving schedule to set your Bitcoin retirement stacking goal. Now, the very best goal of all would be to match the current block subsidy amount. In January 2009, when Bitcoin was first launched, the Bitcoin block subsidy was 50 Bitcoin. Back then, it was worth $0. But today, you could easily be retired off 50 Bitcoin. At the first halving, which was November 2012, the block subsidy dropped to 25 Bitcoin. The Bitcoin price on that day was around $12, so that meant the value of the block subsidy was a little over $300. The next halving was July of 2016. The subsidy drops to 12.5 Bitcoin, but with the Bitcoin price around $650, the total block subsidy was over $8,000. The amount of Bitcoin is cut in half, but the purchasing power of that Bitcoin went up by 26 times. The next halving was May 2020. The subsidy was down to 6.25 Bitcoin, but the Bitcoin price was close to $9,000. So the total subsidy was up to about $55,000. So again, the Bitcoin amount cut in half, the dollar value up almost 7x. Then the fourth halving, the most recent one, April 2024, block subsidy down to 3.125 Bitcoin, where it currently stands. But the BTC price on that day was around $64,000, which means the subsidy was $200,000. So you can see it now, right? Once again, the block subsidy is cut in half, but the purchasing power went up by 3.6 times. Right now, it's 2026. We're not quite halfway through to the next halving, which is likely to be April 2028, when the block subsidy will drop from 3.125 Bitcoin to 1.5625 Bitcoin. Today, the total block subsidy is around $280,000. So even though Bitcoin is down like 30% off its all-time high, we're still continuing the trend. By the way, just for the record, this phenomenon also holds true if you measure it in terms of gold. So gold is a better measure of real purchasing power value than dollars are, because gold doesn't get debased as quickly as fiat. The gold value of the Bitcoin block subsidy went from 0.18 ounces of gold in 2012 to about 6 ounces, to about 31 ounces, and then to about 83 ounces of gold at the last halving in 2024. Now, of course, using the current total block subsidy as your goal is getting harder and harder as the value of Bitcoin keeps going up. And you could look at that as a bad thing because it's running away from you, or you could look at that as a good thing because it means the pattern is working, the value is growing. So if you'd reached that stacking goal already in the past, then the retirement math is holding up. The rate of growth of the block subsidy's dollar value at the time of each halving, the rate that the dollar value of the subsidy is growing, that has shown a decelerating but still very clearly positive pattern. In other words, the Bitcoin subsidy halves every cycle. The US dollar value of the subsidy keeps rising, but the multiple at which that US dollar value grows is compressing each cycle. The multiple went from 26x to 7x to 3.6x. That compression is very normal. That's what you'd expect from a maturing asset. But I think we can keep projecting this pattern out into the future. Now, there's no guarantee that it holds or exactly what the multiple will be, but you could take a conservative forward assumption for the growth multiple of the US dollar value of the subsidy per halving cycle. Take, for example, from 2024 to 2028, if we project a 2x multiple in the value of the block subsidy, that gives us an estimated subsidy value of $400,000 for a Bitcoin block subsidy of 1.5625 Bitcoin. That implies a Bitcoin price of $256,000 in 2028. The next halving occurs in 2032. So let's assume a 1.5x growth multiple in the dollar value of the subsidy. That would give us a $600,000 value of the block subsidy of 0.78125 Bitcoin. That's an implied Bitcoin price of $768,000 per Bitcoin. Then the next halving is in 2036. If we assume just a 1.25x growth multiple in the dollar value of the subsidy, that gives us a $750,000 value of the block subsidy, which at that point is just 0.390625 Bitcoin. The block subsidy is less than half a Bitcoin, but it's worth $750,000. That implies a Bitcoin price of $1.92 million at that point. I'm not going to keep going and going and going with the math lesson, but I will just say that this projection implies a roughly $4.4 million Bitcoin by the year 2040 and a $9.7 million Bitcoin by the year 2044. Those numbers sound pretty bullish to me, closing in on a $10 million Bitcoin less than 20 years from now. But those numbers are not as bullish as some other models predict. If you want to be much more conservative and you take Saylor's bear case, or you take some of the more conservative power law projections, it's possible that your 0.39 Bitcoin won't get you to retirement till like the year 2050. Big bummer, I know. But keep in mind, 0.39 Bitcoin today is only around $35,000. So that's not that much for an entire retirement savings, but that might still seem like a goal that's out of reach for you. If it does seem out of reach, I do have another video right here, which talks about getting to just 0.1 Bitcoin and how that amount is still going to put you ahead of 97% of the world. It's still going to be life-changing. It just might not change your life overnight. So after all that math, what's the takeaway? First of all, retiring on Bitcoin isn't about guessing some magic dollar price. It's about understanding true scarcity and understanding what it means to own 10 minutes worth of the largest and most secure computing network on Earth, and why that is more scarce than any amount of fiat could ever hope to be. The more of that monetary network that you own, the earlier financial freedom becomes an option. I hope you enjoyed this video. If you want to keep learning to stack smarter and grow your conviction in Bitcoin, you hit the subscribe button. You watch this video right here. You can use your Lightning wallet to zap me sats via the QR code on the screen. And as always, quit slacking and start stacking.